Hey, everybody, this is Chris Stevenson. I'm the co-owner and the broker of Legendary Real Estate Services based out of Lake Geneva, Wisconsin. First of all, thanks for viewing the video today. We got some great information for you. You need to stick around for this because I'm going to give you a look under the hood, behind the scenes, as to what we as real estate agents see when a buyer calls up and is looking for a property, say in Delavan or Lake Geneva or Burlington or somewhere like that. I think you'd be shocked. And I don't think it's any surprise the supply demand struggle, this tug of war that we have going on right now in the marketplace, is pretty extreme. And it's very, very difficult for buyers. If you're a buyer, that finding the right property, much less getting an accepted offer on the right property, is very difficult to do. And for sellers, it is an ideal situation. We have extremely low inventory, and the highest median prices in history are pretty much being had all around the nation at this point. And southeastern Wisconsin is no exception. Certainly the Geneva Lakes area is not either. And that includes primary and secondary homes. So you stay tuned, going to give you the under the hood, behind the scenes look at what we see. And I think it'll be surprising to you, along with some great data and some great information at the end, my take on all of it and where we're headed in the future, I believe. Before we start, don't forget, click the like and subscribe button on our YouTube channel, which this is connected to, or the bell for notifications so that you get notified every time one of these local real estate update videos is put out by myself or my team. And I think you'll find the information extremely helpful and allow you to hopefully guide you through the buying and selling process in our local marketplace. And of course, you can always reach out. You see my phone number on the screen. My contact information is available there and also on our Legendary Real Estate Services Facebook page, which you should like, so that you can see everything that we post there on a regular basis, including our new listings. So let's get started. Now, you may have watched some YouTube videos or heard pundits talking about what is this marketplace that we're in these days. And you may have read our articles like this, where they talk about a market downturn, even potential market crash. It's a pretty extreme statement, to be honest with you. People think back to 2008, 2009. I think that's why a lot more people are conservative these days. I think that's why there's such a huge equity buildup by sellers in their homes, where the average time that a seller used to hang on to a property used to be 5 to 7 years. That's now pretty much proven factually 12 years. Honestly, there's a lot of people that have been in their home at 15 to 20 years at this point. So they've added on, they've redecorated, they've updated and made it livable for themselves the way that it was so that they could pay down their mortgage, have less debt, just take a more conservative approach to everything related to real estate for themselves. So, kudos to them. And I also think, one of the reasons that we really have a huge problem with the supply inventory for the buyers to be able to choose from is because so many homeowners have refinanced into record low mortgage rates. And so many of the buyers from the last couple of years have refinanced into record low mortgage rates. That typically, when you do that, you have a 5, 7, 10-year time horizon on getting the payback for those closing costs when you refinance. So there's a huge amount of people out there that have very little incentive to move, and they typically don't unless they have to, unless it's for relocation, unless they absolutely want to upsize or downsize, they want to retire, go south, or go somewhere, or they're going through hard times or divorce or something like that. So there's forced issues that bring it about. But from the standpoint of choosing, the choice is being made only if there's an alternative, because a lot of people realize they are going to have a tough place finding where they want to go. And it almost doesn't matter where around the country, whether it's Florida, Arizona, we're all having the same issues with regards to inventory. You're going to be exposed to just how low that inventory is. And I think that's going to surprise you too, where it's gone from at this time last year to this year. So I think, you may have watched those videos. You may have heard that, this has been a seller's market for the better part of pretty much about 2 years, to be honest with you. I think unless you're living under a rock, like this guy here, which I don't think many people are these days. I think there's enough on the news that I think a lot of people are really pretty astute as to what's going on. But the data that we're going to present and what it means in relation to the future of this marketplace, I think is going to really help you understand some of the dynamics going on in the market that are either going to have an impact or won't have an impact. Now, one of the things that I can tell you that is not going to have an impact for quite a while to come is the fact that they pushed out forbearance, or they're in the process of pushing out forbearance, probably to the end of 2021. There's very little appetite for banks to foreclose on property or for any kind of harm to come to those that have taken the forbearance programs in relation to the pandemic, which, I think all in all is a good thing. but there were a lot of stories circulating that that's going to create a wave of foreclosures and it's create a glut of inventory and it's going to start depressing housing prices. Don't really see that happening now. The appetite for foreclosure or anything on that order is very, very low, very low. So in this video, again, you're going to see what the real estate agents behind the scenes, what we see in the MLS every single day. So keep watching this, and if there's an area that affects you or doesn't, I think what you'll come away with is you'll come away with the principles that I'm trying to convey here that are apropos to any kind of marketplace right now. And I think it's going to really be an eye-opener for you. Now, I'll be the first one to agree that the market is in unseen territory. We've never been in this place before. I've been listing and selling real estate with the RE/MAX brokerage that I used to own, or the coaching and managing of Keefe Real Estate for 11 years, and now back in my own brokerage again. I've never seen this kind of market in my entire lifetime. And honestly, I don't think any real estate professional has. So this truly is uncharted territory. There's way too much demand for the supply of inventory, and inventory is the focus of this video so that you get a clear picture of just exactly what we're talking about. Now, here's my prediction. At some point, the market is going to diverge. Through that divergence term, what do I mean? I think at some point in time, the second home market is going to disconnect. It'll continue to appreciate, while the more local year-round market will start to be hit with more of an affordability crisis. There is only so high a price can go that you start all of a sudden affecting the local people based on the median incomes of the area in which those prices are inclining. So at some point it caps out, and if the prices keep going up and up and up, which as they keep coming on the market and you keep getting over asking price offers, usually within a day to a week to 2 weeks, that can't continue forever. So people will start putting their homes on the market higher, higher, and higher until they start sitting more and longer. That's bound to happen far quicker in the local market, I believe, than in the second home market, where a lot of people are coming up here, mostly from Illinois, and they are coming up here and paying cash for property. They might have more financial resources to be able to do what they need to do, especially if interest rates continue creeping up. If interest rates keep going up, the increase in prices, along with interest rates going up, is going to have a much more compound effect than if it was just increase in prices. And since we've already come off of the lowest interest rates in history by about 1%, that seems to be the trend in the future. And I can tell you that if the economy continues to heat up, then you are going to see an increase in interest rates over time. Right now, the Fed says they're going to maintain. We'll see just exactly what they do, because honestly, the Fed, controls what the banks borrow at the Fed window, but the 10-year bond is what we follow for mortgage rates. And the 10-year bond has been incrementally increasing for the last 30 days. So why don't we jump in and let's look at the market as it relates to Lake Geneva. Now, I'm going to bring up a report that actually you generate from the MLS. This is specifically, as you see right here, is Lake Geneva. And this is live in the back end of the system. This is Lake Geneva. This is the number of listings for Lake Geneva. You can see the active listings, what's happened, and let's just look at the trend line. The actual number itself is kind of a moot point until I show you something a little bit later. If you look at the new listings coming on, the new listings dropped off in November, December, as they usually do, but they haven't picked up much in February, March. And I think only now are they starting to increase in April a little bit, but still not nearly what they have. We are down on listings while sales locally have been increasing. The absorption rate, this is a big number. You can take a look at the trend of the absorption rate. Now, the definition of the absorption rate is how many months of inventory at the sales that we typically have during that month, how many months of inventory we have remaining. And you can see up here, when you're talking about June 20th of 2020, we had about 5.19 months of inventory, okay? Now, they say parity or a balanced market between listings and buyers, the absorption rate is 6 months. So we were pretty close to where we needed to be there. Then all of a sudden you could see in April of last year, a bunch of sales started taking place, but they really started hitting throughout the year last year. And look at where we are today. And this is for Lake Geneva, specifically 53147 zip code. We're at 2.65 months of inventory. So we are literally almost half of what it was at this time last year, which is pretty stunning, actually. And then the days on market, you can see from March of last year and what's happened post-pandemic, the days on the market are much lower. People think everything sits on the market for a day or 2 or 5, but there are listings that stay out there for 60 to 90 days or longer. It depends on the pricing and the type of property. But this absorption rate is the key thing to follow. The other thing I want to show you is really interesting. and I'll do this for these municipalities that we're talking about, this being specifically for Lake Geneva, is take a look at the price ranges that came on the market in 2020. You can see for this month, which is April of 2020, the different variations of the lower end price ranges of listings that came on the market. And then in 2021, only one listing between 100 and 120,000. And then everything is 200,000 and above, with the majority being $500,000 and above. So the dynamic has changed as to what's listed, and a lot of the lower end property that people are hanging on to, because you're talking about year-round property, not second homes per se, they're not coming on the market, and that's where the affordable property is in our area. All right. So when it comes to Lake Geneva, you're talking the median sale price in March of 2020 was $502,000. In March of 2021 is $774,000. That's a 54% increase. That just shows you how the mix has gone to a much higher degree in the type of property that's not only coming on the market, but what's selling. All right. Now, here's what's astounding. The next thing you're going to see that I'm going to show you for Lake Geneva is exactly what I'm talking about when it comes to looking under the hood and seeing what we see. If I was to do a search in Lake Geneva, 53147 zip code, and a buyer called me up and said, hey, we're looking for a house for $300,000. And I was to do a search in Lake Geneva of single family homes in their price range, say $300,000. And I were to type in $300,000 to $500,000, at least 3 bedrooms, at least 2 baths. Here's what I come up with. I come up with 28 results. And the amazing thing is, and I'm going to move this over a little bit. The amazing thing is, of the 28 results, there literally is one that does not have an accepted offer right now. So they may see all these listings in Lake Geneva for sale, and they call them, say, I want to see them. But when the rubber meets the road, there's only one available. That's what we're dealing with as real estate agents. So when you call up or you get frustrated with your agent, they have this real-time information at their fingertips, and you need to honor the fact that they can see what's really going on and not think like, oh, they just want to show me their property, or they're not telling me everything. No, they're telling you everything. It is insanely tight inventory out there right now. Okay. With that being said, I think it's super important for everybody, to be able to just step back, realize we're in a strange place. And this is not some place that we're comfortable with. It's certainly not good for the real estate industry. There's probably more real estate agents now in the history of real estate that there have ever been. This isn't for the faint of heart. If you're thinking about getting into real estate right now, you might want to postpone that until this market normalizes sometime down the road, because for people who don't know and understand what it takes to be able to get listings or work with buyers in this difficult environment, you may be doing yourself a disfavor. Just saying that, putting it out there. The next thing I want to do, let's open up the door and take a look at the Delavan Market. The Delavan Market is a big active market near us. And here is the information about the Delavan Market. Number of listings in Delavan, you can see, have been trending, bumped up all of a sudden in October, and then it dropped back off again in March. Now let's look at the absorption rate. Again, this is the months of inventory on the market in Delavan, 53115. So this includes the city and the township. In Delavan, it started out April of last year at 3.79 months. 3.79 months with balanced market being 6 months, already at record lows. But then look what happens. Right here, we are currently at 1.51 months of inventory on the market. How does that translate into what we see for you as a potential buyer? Right? I'm going to scroll down. I'm going to show you same thing I showed for Lake Geneva, and it is specifically related to the mix of property coming on. In 2020 through March, there was one between 50 and 60,000 single family home, one between 100 and 120, 6 between 2 and 249. This year there was one, just a few. So we had a few more listings come on the market, 2 more actually this year through March. But the typical scenario is that we are not anywhere close to meeting the demand. Nowhere close to meeting the demand. If we take a look behind the scenes, you're a buyer, you call me and say, hey, Chris, looking for Delavan between 2 and 400, 2 and 500,000, at least 3 bedrooms, at least 2 baths. What's on the market? I see a bunch of property on the market. Let me show you what's really going on in the Delavan market, just like I did the other markets. So here's Delavan. There are currently 10 properties on the market. Now, mind you, this includes not only the township, but the city, right? 1 just changed to accepted offer. There are a total of 10, and 1, 2, 3 are available, and a brand new listing that just came on the market also. So out of 10, there's 4 available. One's brand new. One just got an accepted offer. And that's pretty slim pickings for a market that usually sells either the leading municipality and township or the second highest in the entire county. So that's all you have to choose from. That's why one of the reasons people aren't selling is they're like, where do I go? What am I going to do? I get it. Again, it's not your real estate agent's fault. They're looking at the raw data. And when they tell you, hey, there's 10 on the market, but 6 have accepted offers, and you're scratching your head thinking, is that real? Is that true? Oh, yeah, it's real. It's true. And it's the reality we live in right now. Okay. With that being said, what I want to do is I want to take a look at Burlington. I want to take a look at the Burlington market. Getting a lot of demand for Burlington. A recently listed home in Burlington came under contract in one day. If we look at the Burlington market, let's just go to the absorption rate. The absorption rate was, look at how low it started, 2.5 months this time last year. And if we take a look right now, it is all the way down to 1.26 months of inventory in Burlington. Days on the market bottomed out last November. It's kicked up back again. So days on the market, on average, about 54 days on the market. That's cumulative days on the market. So it can, a part of that time accumulates after it has an accepted offer. You need to know that. As far as median prices go, last year in 2020, March of 2020, it was 230. March of 2021, the median sale was 296. That is a 29% increase. So big things going on everywhere, not just here, but all municipalities. This is the reality we live in. If you take a look at the listings, the active listings and how they're spread out, probably pretty similar to last year based on what I see. But I think this is the big thing for Burlington specific is in 2020, this month, the active listings, you can see the varied prices of the active listings, the price ranges. Here, much more condensed. But the big thing is there were 73 last year, this month. This year, there's 40. That's a 45% decrease. Half the amount of listings. Does that present a problem? Oh, yeah. Yeah, that's a big problem. And here's what the big problem is. Chris, I'm looking for a home in Burlington between 200,000 and say 400,000. And Burlington market seems to be a good, 250 to 300 market. What's available? I see listings out there. Well, let me show you what Burlington is because I just did a search for you. Here's Burlington, my friend. In Burlington, we have 23 homes on the market. Let me count for you just exactly what's available. 2 new listings just came on. So there's 2. Here's 1, 3. Here's 1, 4. And here's 1, 5. Out of 23 listings, you can see the yellow C. That means it has an accepted offer. Out of 23 listings, 5 are available. Well, in your price range, if you really want to be around that 250 to 3 mark, we actually have 3. And then it jumps up to almost 290. And then it jumps up to almost 475. So these are the things that we're contending with in the marketplace right now. And this is the reality of why it is so difficult for buyers to compete for property, why buyers are making offers well over asking, oftentimes with no contingencies, waiving inspections. If all you have is a financing contingency with a great offer and you get beat out, it's probably because somebody's paying cash. And that's just the kind of market we're in right now. And if you don't think that's difficult and frustrating for real estate agents, you're kidding yourself, because real estate agents make their living not by showing property, but by closing on property. So if you're going to be in this market as a buyer, I would suggest one thing. You better be willing to stomach it because it's a tough market. Unseen, unheard of, never before experienced, you would be in it. And some people are totally all in their game. They want a house. And I get it. Rented before, don't like renting. I've owned my own place almost my entire life. I understand why people want to buy a house, but you better be willing to put your money where your mouth is, because that's just the name of the game right now. So that's what's happening in relation to the listing and buyer imbalance, the seller and buyer imbalance right now. So that begs the question, even with more people working from home, making choices of maybe needing more space or better designed space or better allocated space, why aren't more people selling their home? And here's my view. The first is they can't find another house to buy, and they know it. They've heard enough reports. Maybe they tiptoed into the market. They took a look around, and certainly they could go on any web portal and they could find out what's available. But we get calls and inquiries all the time for property that's already under contract. And it's disappointing, and the people usually tune out, and sometimes you never hear from them again. The second reason, I think, is, like I said before, people are locked into low interest rate loans. They aren't going anywhere. That is, there's a determining factor when you refinance your home that you're going to stay there for a period of time. And unless something pushes you out, unless you have a reason to move on, you don't. You stay put. And, that's what's happening in a big way. That's millions of people, literally nationally, it's millions of people. The other issue is What's the other option to buying is building. Building just isn't an option for many. Building these days pretty much starts between about $3 and $350. Builders are quoting between $2 and $250 a square foot. I'm going to show you a big reason why. I don't know if you've seen this lately. I actually did a newsletter video about the building market before and the lumber prices and what that means to the builders. And what it really means to builders is they, in their contracts, oftentimes will build escalation clauses in there that if lumber prices go up by a certain amount, they have a certain range where they can raise their prices. That scares a lot of people. And so there's people who just won't build right now, and people who do, more power to you. We got some great builders in the area, but it is rolling the dice a little bit. And here's why. If you have not seen this graph in a while, I think it's going to be super meaningful to you to be able to grasp the validity of what's gone on with lumber prices. So I made my last video when lumber was right about here, which was right about, I think it was $1,012. We had, it was this peak right here, actually, right here. And we had actually taken a downturn to this level. And I told people, I said, I think it's going to go down, but long-term, I think it's going to continue increasing. And there were a number of reasons for that I'm not going to get into now. But then lo and behold, just really in the last week, it's gone from what was a high of about 1,012 all the way down to 850 or so. And then it is now, as of today, right here, 1,250. That's $1,250 per 1,000 running feet board of lumber. That's where lumber prices are. Look at where it's been historically. This is just, folks, look at this. This is just 2020. I would say about March of 2020. Wow. You can take a look at these numbers. You just look at the graph and you realize that the historical nature, this is another extreme. We have extreme interest rates. We have extreme buyer demand. We have extreme low inventory. We have extreme lumber prices. Crazy numbers, just crazy numbers. And so all of a sudden, not only the availability of land to plat and subdivide, but the availability of building materials and the cost of building materials is becoming another major, major obstacle. So for most people, unless they have to sell, they're not a bad strategy. I hate to say that as a real estate agent who really focuses almost entirely his business on listing and marketing property and specializes in that part of the business. But, if you're considering it and interest rates continue going up, I don't care if you're an investor, second homeowner, or it's your primary home. If interest rates keep going up, you're going to want to sell, because an increase in interest rates, that's the one thing that can really change consumer sentiment very, very quickly, probably faster than anything else in the market. And with high prices at these levels, historic levels, already in place, it just puts affordability for a lot more people even further out of reach of the potential buyers if even interest rates start increasing. So, I'm really here to just, let you know that that's my take on it. And I think the perspective of most people right now is I'm going to get into the market to buy either at all costs, at no cost. I'm not going to do it. And if I'm a seller, I'm going to sell if it makes sense because I know where I'm going and I have a plan. Or if I'm going to do a double move and I'm going to rent until what I find comes on the market, or if I have to, because I have things going on in my life that just make it necessary for me to sell. So that's what's going on in the marketplaces. That's a look under the hood. That's actually in our MLS to be able to show you what we as realtors see as available and unavailable property in the marketplaces. And, let's face it, literally when you have 20 properties on the market and you have 4 available, I can't even tell you all the buyers that people are working with. I mean, it's hundreds and hundreds of people. It's one of the most competitive games that there is. Again, this isn't just difficult on buyers and difficult on sellers. It's difficult on real estate agents too, in a big, big, big way that's very unanticipated. And as good as last year was, because things were flying off the shelf, with the inventory where it's at today, not only can buyers not find property to buy, but realtors are having difficulty finding property to list. It's really challenging everybody in a multitude of ways. That's my take on it. I hope you enjoy the perspective given to you of seeing what every single day as a real estate professional sounds and feels like, and empathizing with the buyers and the sellers in the marketplace. If you're thinking about selling your home and you want sound real estate advice about pricing, about marketing, how to make the selling process go as smooth as possible and really go in depth about that process so that you can make the most of it, and of course, make the most amount of money to put your home in the position to win with any buyer. Please feel free to connect with us on our website at legendaryrealestateservices.com. Again, subscribe to our YouTube channel, our Facebook page at Legendary Real Estate Services. And we do have some great links below for buyers and sellers and for resources for you to be able to access to continue to get more great information. All right. So that is our first quarter report for 2021. Let's keep our fingers crossed that it gets a little bit easier for everybody out there, because this is a very challenging time. This is not for the faint of heart. I can tell you as a 31-year veteran, it's the most extraordinary and unique time that I've ever seen. Honestly, it's an exciting time to be part of something because you see something in a perspective and in a way that you've never seen it before. But at the same time, I understand it complicates lives, it slows things down, it makes things difficult. And for a lot of people, it's very stressful. So that is not the idea, is to make things stressful. It's to make things as easy as possible. So look, stay great, stay informed, stay ahead of the curve. Hopefully we can help you get there. This is Chris Stevensenis of Legendary Real Estate Services. Let us know if you need any help, and we hope to see you the next time on our quarterly update video. Thanks for watching.